Hi, everyone. Thank you so much for joining us today for our YMC Talks, the intersection of art and finance. I am Tess Scholar on behalf of FCS YMC Leadership. Thank you again for joining us, and we welcome you on behalf of our all-volunteer board of directors. And I would like to thank our speakers and introduce our moderator for today. We have Timothy Kompanchenko, CTO of Artery. We have Elizabeth von Habsburg, Managing Director, Winston Art Group. Cynthia Sachs, Managing Director of Yield Street and CIO, Athena Art Finance, and our moderator, Sandy Lee from NYU. We would very much like to thank our sponsor, our presenting sponsor today, Yield Street, for allowing us to have this conversation. Thank you very much for partnering with us. And if you'll just allow me to take a moment of your time to talk about some upcoming events that we have. And without further ado, we are very much looking forward to our conversation today, and we'll get right into our event. So please welcome to the virtual stage our moderator, Sandy Lee, along with our panelists, Timothy, Elizabeth, and Cynthia.
Thank you all for joining us today and for having us. We're so thrilled to have this opportunity just to chat about all the exciting things going on in the art and finance space. Quick disclosure before we begin, I am moderating in the capacity of my role as adjunct faculty at NYU. Anything that is disclosed today is not on behalf of Canara Group. Thank you. So today's topic is on art and finance, but we really can't talk about what's happening in those spaces without talking about tech, because tech is what is driving the tools, the data analysis, the platforms that is allowing us to do so many really interesting things right now. So just keep in mind that that will be a large part of our discussion. So thrilled to introduce our panelists today. We have Cynthia Sachs. She is a managing director at Yield Street and also CIO of Athena Art Finance, which is a specialty finance lender. She has been CIO since its 2015 inception and has over 25 years of asset-based lending and credit experience. She was previously at Morgan Stanley, Natexis, worked at Bloomberg on the fintech side, building out their fixed income evaluation tool, and is just an exciting participant in this space. I'm also really happy to introduce Elizabeth von Habsburg. Elizabeth is managing director of Winston Art Advisory, which is a leading art appraiser in the field. They are independent, which means they work independently of any auction house or dealer. So their goal is to be the middleman between the collector and organizations that may have their own interests. She brings 30 years of experience in the art and appraisal world to this conversation and has perhaps our most traditional art historical background in that she has a BA from Stanford and MA from Columbia in art history. Finally, we have Tim Kompanchenko of Artery. Artery is a secure public registry for art and objects. It uses blockchain tech to collaborate with art institutions and collectors on digital signatures. And prior to Artery, he was the CTO at Christie's and Collectrium, which was acquired by Christie's in 2015. So welcome, everyone. So quick, just to start off, because I think this range of backgrounds is so interesting. You're all working together and collaborating and sharing notes in some way now, but you really have very different paths to where you are. If you could each talk about how you made your way to sort of this art finance space, I'd appreciate that.
Yeah, so let me kick it off. So I am an investment professional that focuses now on the art market, but I've really come out of traditional Wall Street banks, and as you probably know, have focused on many different industries. I've focused in media, entertainment, tech, healthcare, consumer products. So I've pretty much covered a lot of industries, and the way I thought about art was it's another industry, and so has really been fascinating since 2015 when Athena Art Finance was formed. It was then acquired by Yale Street in 2019 to take all of my traditional banking experience and investing experience and bring it to the art market. And that's why it's so impressive to have the panelists that are on the panel today, because they really are kind of the true, I'll say, pioneers in creating art as, or trying to create and creating art as an asset class, because of their independence, because of their expertise. And so super happy to be here, and thank you all for having me. And it's just been great learning about the art market. It's been fun, it's been exciting, and just been a wonderful experience, and just learning every day as it evolves.
So Liz, maybe you can go next, or I can go. My name is Tim, and I'm a tech guy, and it looked that art industry to me when I was considering to enter it was very ready. It was very behind technologically. It's very traditional space, and there were many opportunities to bring in technology in a way that would have very great impact, that would unlock business practices that are kind of locked in right now, and the technology can unlock them and improve the business environment. So it's very underserved area, very exciting for technologists. But another area that I was very passionate about, and the reason why I'm thrilled to be in the art industry, is because it's around creative works. So it cannot be fully, technology is not replacing parts of what's happening, it's enhancing sort of human nature, and it's taking this into account. It's not where technology allows us to disconnect and from real world, but instead enhances the real world. There's absolutely, it's an absolutely hard requirement for technology in this space, is to understand the nuances of the human interaction and subjectivity aspects of the industry. So very, very thrilled to apply in this kind of challenging area myself.
I'll jump in now just to say, Sandy, thank you for the introduction. I actually did not study art history at Stanford or Columbia. No, I studied.
I am so sorry.
Different. No, I was the daughter and granddaughter of collectors. That's the art background. But at Stanford, I studied arms control and disarmament. So that international relations became a very helpful negotiating tool with the collectors that we deal with. You sometimes need arms control and disarmament to handle the collectors. And then in graduate school, I studied international economics. I ended up taking a curve in the path and ended up at Christie's as my first career move, and then moved on from there to another auction house, to another appraisal and advisory company. And then in 2010, founded Winston Art Group with some of my colleagues as a more nimble and more forward-looking company that would use technology and cutting-edge business practices with the art world.
Thank you. Such a fascinating group, and I do apologize, Liz. I'm curious about, and I do see this hitting each of your desks. What role is data playing in the market now? Perhaps Cynthia, you can talk about what you're seeing.
Absolutely. Well, it's playing a huge part. As I mentioned, I came out of traditional industries, analyzing them, from an investment perspective. And as everyone knows, to do that, you need data, and you need to be able to analyze data and have a foundation how you do that and how you look at the market. When I at least started at Athena, call it 6 years ago, the art market, then I'll say, was very opaque. And so it's very difficult to make decisions when you don't have data. And so back then, it was very important that we built our own data analytics, our own proprietary database, so we could build, kind of decision-making tools. And I brought a lot of that right from my kind of, investment banking days at Morgan Stanley and Bank of America. I was there as well. And also from Bloomberg, taking all of that kind of, finance, banking, tech, and bringing it to Athena to be able to create data analytics to make decisions around how to lend against art. And so that was then, but I have to say today's very different. Still, working through it, and Liz and Tim will talk more about this. But as we went through COVID, the most incredible thing I think that happened in the art market was the evolution of the ability to extract data from the market. The market likes to be very private, and it kind of like blew a hole in that. Not to say that there isn't a private part of the market, but being able to expand the auction part of the market in a significant way online, to be able to see the galleries going online, and being able to see that data in terms of price transparency, et cetera. It's hugely exciting, is hugely powerful, and is really a game changer for the market. And I kind of use this expression that the art market, which is a very historically old school market, went from really, the 18th century to literally the 22nd century, like almost overnight. And they've really kind of stepped up to the challenge, quite frankly. I'm really impressed with what's happened in the art market. We'll talk about NFTs, shortly. It's just really been incredible, and I'm just so excited to be in it now and a part of it. So yeah, data is really what's going to drive this market forward.
Yeah, maybe I can add a few comments, a few points that stick out in my mind a great deal. The tradition of the industry is to, and it's generalization, but it's a little bit on the spectrum of intuition-based decision-making. That's how traditionally where it is. It's personal knowledge, it's advice, it's a little bit of intuitive decision-making versus data-driven decision-making that maybe current finance areas are more used to. And although we probably shouldn't, this is not something that could go to sort of algorithmic trading equivalent within the art market. Our data is not probably going to get there, but we are growing, and the adoption of insights that guide your decision, that one of the variables to make your decision, are becoming a necessity and becoming more available. But there was a little bit of also education when I was at Christie's. There was a little bit of education of saying that this is not to make a decision to replace you, it's to inform you further so you can make more fact-based decision making. So there's a little bit of cultural aspect in the art industry and the finance that is transitioning with this. And of course, it's also around the availability of data and the types of insights that it can provide. If looking from outside, if we compare it to some of the data projects that Google might be working on, this is really not a very big data set. It borderlines of not being really a big data kind of a territory. And that creates a necessity to be nuanced about how you approach this through proxying one object through another to understand the trends, etc. But one of the things that it can definitely give you is velocity of an artist, maybe acceleration of an artist, applying some of those principles to, again, be one of these big variables in decision making. So not the nuances of how data products are created in the art industry are a lot of nuances, but there's still many insights that they produce.
And adding to what Tim and Cynthia have said, one of the most important things that we always tell clients is you can't make an informed decision unless you have an accurate valuation of a work of art. And data produces that. And the more data points you have, the more accurate your appraisal is, and the more informed you can be. It's as simple as that.
Yeah.
Yeah.
And oh, Cynthia, please.
No, I was just going to echo what Liz said, is that it's the core really to any transaction, even on the lending side, on the purchasing side. So having experts like Liz, using the right data points is really invaluable, because that is the starting point.
Information, impartial information, the more the merrier,
right,
in this area. Cynthia did mention NFTs, and I think we can't talk about art and finance right now without talking about what's happening with NFTs. So a few minutes on that. Quick primer for the uninitiated. NFT stands for non-fungible tokens. Non-fungible is a reference to the uniqueness of an item. So using Econ 101 terms, I'd say there are substitutes, but no equivalents is how you might think of that. And then a token is a unit of data stored on blockchain. So to use a really simple analogy, I like to think of it as a painting on a wall would be the equivalent to an NFT. And then the poster, that is made of that printing, of that painting, might be the digital copies that might exist, but are not the NFT itself. So I'm sure people have seen Google searches of NFTs have popped in March. You had the large Beeple sale at Christie's not that long ago. It's a super hot topic amongst not just the art people, which is, I think, super interesting. I'd be curious to hear how the panelists have seen NFTs kind of filter into your businesses or into your market discussions. Perhaps,
Maybe,
Tim, you could
yeah,
give us some thoughts.
yeah. My tongue is twitching it's itching to talk about this for sure. The NFT has been, it's an incredible impact on archery. Archery has been in the art world speaking about blockchain, not necessarily because blockchain is a buzzword, but because it's, once you're out of big centralized organization realm and you need to work with multiple independent firms, you have to have a trust mechanism, trust platform to be able to rely on. And blockchain is such, it's an enablement for solving trust challenges. But it requires also participants to sort of understand and buy into this. And it was a little bit hard because, one, it's complex ideas, technically speaking. So to promote this in the art world was challenging from this point of view. But as well, it was always, everybody in the auction business, from my perspective, as a technologist, because it's very seasonal up to now, probably will be changing, but it's been very seasonal. So everybody's focusing on their next season, on those sales, and it's harder for them to think about long term. And so they're focusing on the immediate investment. It was very hard for them to pay attention to blockchain. Well, with NFTs that came around, it just demonstrated all of the aspects that are important, where if you buy an NFT, it has all the trust associated with this. And it makes it easier to understand that if you create a token, an NFT that relates to a physical artwork, that you can also interact with physical artwork as well as transact in them in a very secure way. It needs to, of course, have underlying trusted statements from businesses that are qualified to make those statements, but you can rely that they've been recorded correctly at that time. You can independently verify this information and therefore trust the information. So it's been really an explosion of activity for us. And yes, I think right now the NFTs, as far as digital asset class, it's very interesting. And as any new, I consider it as a new medium in a sense. At first, plastic wasn't accepted as a medium as art, and then it can't be art. It's made out of plastic. Well, now it's accepted. I think similar thing can happen. It will happen with NFTs, and there's a lot of things happening. Some of it will correct itself to something. Some of it will remain valuable and tradable NFTs. Some of them will be a yard sale kind of NFTs. So this process is still happening very early on, but it definitely, as I said, it helps us to have a conversation which is larger, where the physical art pieces are a little bit hard to operate with right now. You have to go through traditional institutions. You have to do due diligence at that time. You have to sort of trust the seller on due diligence. And all of a sudden, contrast in that, if you have a token representing a physical artwork that already has that security, first, trust security, that all of this information can be trusted. And also, if the token is done in a way that you can actually trade it in a technical way on many platforms, that opens up this already existing established physical art market to a new sales channel.
So I'll add on to that. We're clearly in the early stages of gathering data. There have been very few NFTs sold through the auction process, the major auction process, but it's the most exciting thing that's happened to the art market in a long time. And one of the reasons for that is that we have now gathered into the buying fold a whole new collector group. So it's normally younger and more tech savvy collectors, most of them who've never collected traditional brick and mortar works of art, and they really understand this. It's their language, and we find it extremely interesting and exciting. It's a new day. It's wonderful.
Absolutely, I can add to it from just a quick comment. There is maybe a generational or cultural gap a little bit, where the more established collectors who are more senior, they're used to coming in person and discussing things for being treated that way and getting into potentially buying something this way. And my friends, my colleagues, they want independent source and they want to do it on their own before they talk to somebody. And that creates a barrier for traditional institutions who do not have a modern user experience, client experience that is more digital and accessible. That creates that barrier for the newer generation that is either inheriting estates or Silicon Valley in new money. We need new outlets, and as Liz said, this opens it up for them as an interface.
Yeah, I would just add from a finance perspective and taking risk against kind of art and looking at the NFT market. The NFT market does really validate title and ownership through, a digitized ledger or a public ledger, and that's something that's been missing in the physical side, and that's what makes art finance challenging. And we've obviously worked through these issues, but it is one of those things that if you look at real estate and you have the mortgage market as an example, it's a huge market, and it largely relies on title, and it relies on title registry. So really from a kind of very basic perspective, that already exists for certain asset classes. It's been built. It needs to be digitized in different ways, but that's the whole core of how how mortgage lending is done. And so this whole technology to be able to now create, I'll say, the mortgage market for art, right, to create a true credit product behind a real asset, physical asset, like real estate's a physical asset, so is art. And some of this art is very, very expensive, right? It's tens of millions of dollars. It's incredible how people don't finance it. Well, people don't finance it, generally speaking, because it's not so easy to finance, because there are issues like this that have kind of always existed behind the provenance and being comfortable and confident and feeling very good about the transfer of ownership and title. So from a finance perspective, we're super excited about NFTs in that it kind of raises the bar for the physical art world to do the same, which is what Artery is doing. And so it's just amazing to see this transformation, or the transformation that's also coming for the art market, and how that will evolve art as a true credit asset class, or as a true asset class, with a credit market behind it, because that is really what makes an asset class. I don't know any other asset class that doesn't have credit behind it. Whether it be real estate has mortgage market, stock market and bond market have margins behind it, the muni market, the corporate market, they all have credit markets behind them. So art will do the same as this proliferates. So it's super exciting for us.
Cynthia, thank you for bringing that conversation into the bigger applications or realm of applications that we're seeing. I'd love for the group to discuss how, again, staying on tech and the uses of tech in art, how are people approaching investing in art now? Tim, you touched on that a little bit, that it is just a different dialogue. What else are you seeing in terms of maybe sizing, who's coming to the table, what is changing, or what has changed these past few years?
Maybe I can just add to this that I think the dynamic is that one of the dynamics that tokenization can bring into the art world is that, first of all, the approachability of investment ticket sizes can be more managed by much wider audience. You don't have to be ultra wealthy. All of a sudden, you can participate in fractionalized ownership of something very important that you might be also passionate about, and participate in it as an investment. And also, because of how this information is wrapped into token, you don't have to be an insider to be confident, to be comfortable that you're investing into something that makes sense for you. You don't have to be an art historian or an insider or rely on somebody's advice. This information is already provided to you. It's been signed off by companies like Winston Art Group, that's their business, and the world trusts this. So you can basically rely, you can sort of be guided in how to invest. So it really opens up the industry for many more types of investors who before would have hesitated, either because they weren't sure about the information or how to guide themselves, how to make sense around the investment. And also the ticket sizes were maybe too high for them. And also, again, one other area is liquidity, which is great, which is a great point. Although there's not that many maybe secondary trading places now, but it will eventually go where these tokens, there's a secondary trading for them, which makes them much more liquid. You're not typically in the art world, you need to hold your assets for years, for 5 years, 10 years, ideally, before you can flip them. It's not something you can just trade all the time. Well, if it's tokenized versions, you can trade tokens in a much different way. It also allows people who own art to all of a sudden, instead of also only being able to get loan against it, they need to get cash injection into some other effort they're doing. They can potentially tokenize half of the artwork, retain the ownership of it, but share the upside of the future investment on 50% of their art with other investors. So it basically opens the industry, I feel, it opens the industry to a much wider audience, and the overall industry will grow. So I think it's not something that is as visible right now. I think the early indications are with NFTs because of how popular they became, and that's an indicator. But that's the future of it, is for industry to grow, it needs to have an interface that is more traditional, what I think of as finance interface for non-insiders that can easily interface with the industry, and that will grow it tremendously.
I jump in to say that, traditionally the barrier to investing in art was that art was always seen as an illiquid asset class. When I got into the art world 30 years ago, it was no one would even consider investing in art. It wasn't considered an asset class. But now we have this whole ability to leverage art, and Cynthia's company is the perfect example. We did last year $3 billion worth of appraisals for art for collateral loans. 10 years ago, that didn't exist. So it's been an exponential growth in that area. And this is bringing in, again, a whole new comfort level to the financial sector of the market, to other sectors of the market who always thought of art as being something that they would just hang on their walls and not something they could actually use. So that's one area. And the second thing I'd say about investing in art is there are all these technological platforms now, in addition to what we've discussed today, like Art Ticker that Phillips uses, like Thread Genius that Sotheby's uses, like our app that we just created for investing in wine. These are all new, and these are proliferating nonstop, and these are all ways to help ease people into investing in art, but feeling comfortable that they have data and platforms to back up those investments.
Yeah, and I would just add, from more of a macro perspective, that what we're hearing from an investor perspective, many of them are our borrowers, actually, who are leveraging their existing art collections to invest in more art and to continue to grow kind of their asset pool. Is that particularly for newer investors, they are looking to the physical art market, away from NFTs right now, I'll say, to allocate some capital because of the inflation expectations that are in the marketplace right now. So just from a little bit of a different perspective. So a lot of focus on art, physical art as a store of wealth, particularly during inflationary times. And also what we're seeing is investors / collectors rotating out of the blue chip collections that they've held for many years with classic names, that are still well, revered and accepted and liked, but looking to maybe monetize those collections. And, they've seen their running capital appreciation over the last 5 to 10 years, monetize that, and now really looking towards a different part of the market, which has become, really exciting, which is more mid-market and emerging artists, whether they be Black or women artists, et cetera, where they see more growth potential. And they also want to back those artists and that part of the market for a lot of reasons, right? So they see a lot of growth there. So we're seeing, I think, a major kind of paradigm shift, not just in the art market generally going online with data, with all the things that are being said, but also with the way investors are looking at the market and looking where value creation is. And again, I think the whole blockchain part of this is super important, because you can now differentiate I'll just say a blockchain instead of NFT, a blockchain, validated artwork versus one that isn't. Not to say the one that isn't, it doesn't have its own merits, but you would feel more confident in buying the one that has that kind of digitization behind it and validation behind it. And I think valuations will start shifting because of that, if you have that imprimatur of a certification from Artery, let's say, and Winston. So it really interesting times, and it's almost as though the art market really is finally entering into kind of today's day and age very quickly. But everyone's starting to, kind of behave and switch up their financial assets accordingly. And with that, there'll be more confidence, liquidity, and just the market will grow exponentially. So we are really at the precipice of all of this.
A follow-up question to Cynthia or Liz, whomever would like to answer. Are you seeing a change in who's coming through the door as collectors or investor, however you might categorize them, given that there's more opportunity to access?
I can jump in and say we're seeing a tremendous broadening of clients, not only geographically, but in age, in financial resources, because there really is something for everybody now across the world.
Yeah, I would echo that. I would say exactly the same. We're seeing, I'll say traditional collectors who now are realizing they want to grow their collections more, looking for liquidity as coming to us for an art loan, let's just say, and also just different categories of focus, and yeah, a very different type of which is incredible, a different just general type of client walking in the door looking for some form of liquidity, either off of their existing art collection, or also they just want to maybe start acquiring more. And so just trying to figure out how they become more of an investor even in the asset class. So I think there's a lot of schools of thought happening, but art is definitely becoming a major part of the conversation in the financial markets more and more, and everyone's sorting through it and looking to, I think, invest and collect, kind of together. It depends on who they are, but they kind of go hand in hand.
Thank you. And we are running short on time, but I just think this question is so interesting. In this COVID year that we're just getting out of, hopefully for everyone, there are a lot of changes to the art fair cycle, to how people have been forced to sort of buy and sell art. What have you been observing? The team had referenced some of this earlier in terms of viewing rooms and such, but I'd love to hear what's worked for you, what hasn't, what surprised you.
Shall I jump? Do you want to take that? I would just say one of the things that Cynthia alluded to before, we talked about this before, is that the auction calendar was traditionally a 2-season calendar. It was in the spring and fall. And with COVID and the lack of in-person auctions, the auctions went to hybrid formats or to solely online formats. So you're seeing auctions all year round, nonstop. And this is, it can be overwhelming for those of us who are professionals in the art market, or for collectors, because you just don't know what to focus on. But on the other hand, it's been extremely important for gathering data. And we have been scraping data off of the internet, off of the auction sites and so on, because we have now so many more data points for any decisions that our clients want to make, and for gathering important information for them to make informed decisions. So that's been one big change.
Yeah. On the other spectrum, I think technology is still maturing, in the sense that because there was not a strong dialogue between tech and the business decision-making in people in the art industry before, some of the technology that has been quickly introduced, I think, is very basic in its form. For example, online viewing rooms aren't always representing the nuances of in-person interaction. The galleries have front of the house, the galleries have back room. There is a reason why certain things are displayed right away, certain things are reserved for people who they qualify in a certain way. Those nuances, I feel, are not yet taken into account. So what ends up being is that There's very sort of relatively primitive first efforts, but I believe they will mature, and there will be a digital analogy of what's been happening in the world coming better and better with more nuances. So we're kind of just the beginning of this, but people are definitely forced to solve this challenge for sure.
Yeah, and I would just add, I mean, we're in we're in a huge evolution that's going to be much quicker than the art market has ever seen in its lifetime, quite frankly. And different art forms are kind of bubbling up, and I think the art market will be a completely different place 6 months from now, a year from now, 2 years from now, as all these technologies come on board, as more eyes are on the market. I think you'll see a lot of incredible growth and valuation in the market, and just more players in different ways. And this is really, we're like in the first inning in my mind. So it's really an exciting time.
Let me add one more comment that I forgot, and I don't think we've spoken about this yet today, is that cryptocurrency, which was everyone was terrified of before this, has suddenly become front and center. And I think it's about time, and I think we're going to move forward with that very quickly as a more generally used method of transacting art.
Yeah. And maybe just one comment to that. The challenges that art industry has to solve is the KYC and AML checks, which of course are not as trivial with cryptocurrencies. So, but again, this is one of the challenges that we need to work through and figure out how we can trace certain money, certain way, even if it's crypto. And there is already solutions in place. But unless we start that thread of the conversation, we'll never be able to adopt it. So it is for sure happening. And it enables, I believe it enabled higher sales of those NFTs that have been sold, because they were opened to the completely new money. And for many people, it's much easier to invest Ethereum or other type of cryptocurrency into something like artwork versus fiat cash.
Absolutely. All right. We're moving to Q&A just to make sure we have time to answer some of the questions coming in. If you do have a question, please drop it in the Q&A. One clarification for Liz. Liz, can you clarify, do you believe that art is not an asset? Banks have been, this question is from Ramiro. Can you clarify that you believe that art is not an asset? Banks have been buying it and book it value as an asset in their books.
No, art was never considered an asset class when I started in the art market. Banks have always collected art, but they haven't been using it until the last 10 years. They haven't allowed clients to use art as collateral for loans. They used other methods for giving clients loans. So these using art as an asset to collateralize loans has only really happened in the last 10 years. And the art that the banks were collecting was used really as an interface with their clients, as a way to get conversations started and so on. It wasn't used for collateral loans.
Thank you. Next question from the audience. How do you see tech data playing a role in helping track pieces of art, for example, if a piece is stolen? I know all of you have been thinking about provenance. Would love your thoughts on what you're seeing.
Yes, maybe I can start this one. There's definitely in other industries many ways to apply different type of tracking technologies. The art industry is a little specific because we are dealing with very precious items that some of them you can't touch, some of them you can't glue on, but there are different solutions from diamond dust to chemical adhesives to physical trackers that allows different functionality. If there's a larger sort of emitting physical tracker, then it can omit its location, etc. There's not one standard though, because again, it's a very complex thing, what you can actually do to the art. Another aspect of this is that you really need those technologies to work when there is a dispute about authenticity of something, and so those environments have to acknowledge the technology and consider it a strong enough evidence. And if you have a very complex scenario where you have fingerprinting and sort of molecular level scan, and then you have to use AI to authenticate it because it's different moisture levels or different lighting, and you have to do this complex computing. It's not always very easily understood by, let's say, a judge. So it's still work in progress. The important thing is to what's available to collect it in a centralized registry. That's what Arthur is doing, because it can easily highlight at least subsets of information of what was available with what at what time, and it helps with that guidance. And of course, like from our point of view, as soon as there is one de facto established tracking technology available, we are ready to integrate with this. So, but we are still watching various companies trying to get to the level to be acknowledged as a de facto technology solution for tracker, with all of the considerations around the actual physical art pieces.
Yeah, there's a new app that I just heard about called ID Art, and I've just downloaded it recently. It was just put on the platform. That's a kind of app that we'll see, I'm sure, more of to track works of art that might be potentially stolen. There are also other organizations that track stolen works of art that exist.
Yeah, there are international databases that do exist that pull from Interpol and other, law enforcement agencies globally. And, obviously it's all about the data that goes into that, but, that does exist, but as Liz said, it's being built upon and improved.
Follow-up question from Norman. Feel free to take whomever would like. Please talk more about the metrics used to generate data on art. I'm not clear, one, what is measured and tracked. So perhaps one could talk about what is of most interest to you, or of interest to you as you're thinking about storing information or utilizing information.
I'm happy. Do you want to take it, Tim?
Yeah, I think your use case is clearest, most concise, like how you use data for your decision making at Athena, for example. That's a very good example, I feel.
Yeah, I mean, for us, right, we're taking risk against art, and we're lending money against it. And so we need to understand data with regards to obviously valuation, but also with regards to liquidity, regards to the stability of valuations and how an artist has performed over time. So what that artist's track record is, over 15, 20 years, and looking at that from a classic perspective of CAGRs or growth rates or volatility, things that other asset classes look at as well. It's really important for us. So we look at kind of the classic metrics, but we have to extract them from the art market in a way that's the other asset classes have already kind of formed their basis for data gathering. And so we do that, and we put that together. Also the price points that the artist trades in and how that has shifted over time. So is the artist kind of moving upwards in terms of valuation, moving downwards in terms of buckets of price points? And that's also interesting because, as you can imagine, while a $10 million Picasso is incredible, not everyone could buy a $10 million Picasso. So it's a very shallow market for that type of item, even though Picasso is the most prolific artist, as an example, and very well traded, very liquid. With the $10 million one, maybe not so much. And that is kind of across if you use it as an example, right, you would want to see that across the entire market. And actually the mid-market is probably, the smaller the mid-market is the more liquid because you have more buyers. So buyer depth and breadth and all the things that you care about in the world of trading, you would care about as well here. So anyway, from my perspective, it's very much classic financial metrics that we apply to understand how to take risk against the asset.
Thank you. And last question, 30-second answer that I'm lobbing to Liz. From Michelle, as a young woman artist, how could I potentially get my work considered? I do not market it much on social media, etc., but I have a lot of art stored and still create. Social media and self-promoting a crucial part of this from an artist perspective.
I would say, first and foremost, get out there and meet as many gallerists and go to the art fairs, talk to people, see who's showing the kind of work that you do. Use social media. Social media is extraordinarily powerful. Talk to Tim about an NFT. it's not easy, but emerging art is really strongly collected now, and there's lots of opportunity, but you have to walk out of your studio and get out there and talk to people.
With that, I thank our panelists for a very rich afternoon discussion. We do appreciate your time.
Thank you. Great to be here.
Yeah. Thank you all so much for your time today. Liz, Tim, Cynthia, and of course, Sandy, thank you for being our moderator of this discussion. And thank you all for attending. We look forward to seeing everyone at upcoming FCS events. Have a great day. Thanks so much.